All right, let's go ahead and get the music under control and get the audio check out of the way. Let me know if you can hear me across the various chats going on here as I bring the music down. Got about 30 seconds to go here, but I'm going to get the music under control first. Okay, so I am hearing from some of you, and I am reading that the volume sounds good. All right, cool. All right, let's roll into it. We've had a little bit of action in the overnight hours and pre-New York session hours on Bitcoin and other things here. So let's roll into our live stream. Hello and welcome to Landy's Crypto Corner for a Market Madness technical analysis live stream. Today is January 3rd, 2024. And I did have a video that came out yesterday evening for me after market close. I did upload about a 10-minute video called Staring at Charts. And this is a new series that we're going to be doing here on Landy's Crypto Corner on the days that I am not live streaming. So in this case, I live stream Monday, Wednesday, and Friday. And that Staring at Charts series should go up at minimum on Tuesdays and Thursdays, and possibly the weekends. I might actually save the shorts for the weekends. I'm kind of trying to do a few different things with the channel here, see if we can't boost subscribers. So if you are new to the channel, thank you for hanging out with us. Thank you for subscribing. Likes, subs do help us grow. All of the things that we talk about here and any of the indicators that I feature, I do try to offer free alternatives, and all the information I give out is for free. And we're going to start by looking at the Coinbase chart for Bitcoin today. And if you did watch yesterday's video, so it was about 10 minutes, called Staring at Charts for January 2nd, 2024. Did I say that it was January 3rd, 2023? It's actually January 3rd, 2024. I don't know what I actually said at the beginning of this, but it is January 3rd, 2024. So yesterday's video, I did point out that, the daily had closed and initiated expansion by closing above the upper second standard deviation of the Bollinger Bands. And I had gone on quite a bit of a extended look at this and basically said as long as Bitcoin was closing above the upper second standard deviation on the lower term time frame candles, I would be looking for the monthly to get ran again, possibly to this high at $46,000 and above to the monthly close at around 47 and the monthly swing high up there, possibly even more up to around, the monthly swing high, by the way, is 48,240, but possibly up to, maybe the low $50,000 region, provided Bitcoin was closing candles above the upper second and at minimum for expansion's sake, closing above the upper first. And if not, we would be looking back to the weekly here at 43.2, where the basis was at the time. It has adjusted in real time. Below there, looking to the lower first. Below there, looking for a run of the lows here at around 41,000. And if that area was breached, we were looking to the lower second, somewhere around this low side structure. And, well, guess what? We saw a move in those lower term timeframes back to the monthly support resistance area, nearly pinning it exactly there at 45,520. And then dumping off all the way to the bottom side of the range, which was our primary area of interest. Should this lower first standard deviation and weekly be lost? Well, we were looking at this low getting swung, and then we were looking to the actual range lows of this consolidation. Below there is where we start looking for this weekly here at 39K to the monthly just below at 38.5. And then, of course, that area, of course, has been tested as resistance and not retested as support. So logical area to look for at least short-term time frame bounces. And below there, then we have those big weekly areas, the 37.7 to 36.2. Obviously, we did see accumulation in that area with a nice spike down into the next support zone there at the monthly at 35K to the weekly at 34,750. Now, a lot is being made of what, caused this particular dump off today. And quite honestly, you're going to see a lot of people talking about, wow, well, it's obvious that it was that, this, what was it, Matrix, gosh, now I can't think of the name, Matrix Port, which is I guess, a bit of a news outlet for crypto that almost nobody has heard of. They they released two reports in the same day. Bitcoin spot ETF approval is imminent. Bitcoin to jump to around $50,000, and then they also released at the same time why the SEC would reject Bitcoin spot ETF again, or why they would reject this Bitcoin spot ETF, and made this case for why they would do that. Then the block account picked up on that, and then a whole bunch of other accounts started spreading just the one around there, basically making the argument that the SEC is pretty much staffed by Democrats. Democrats have been very anti-crypto. A lot of them have connections to Elizabeth Warren, so on and so forth. So they're obviously going to, deny it. And, it's all speculation. It's all silly speculation. And, it's really not, it's very well timed. I will give you that. The reason why it's very well timed is when we look over here at open interest, we can see that it was up here around the 12.2 billion. And this has now dumped down to around 10.8 billion. So, we're looking at, about $1.5 billion dollars in leverage wiped out in one fell swoop. But we also had the BlackRock, Van Eck, and all of the other bigger players that are in this space who have filed for spot ETFs have pushed back their initial buys, their seed round buys, to the 5th, whereas they were scheduled to hit today. So it just so happens that before market open, which by the way is when they would have had to start seeding, would have been at the New York session open at 6:30 my time, 6:30 in the morning my time, 9:30 on the East Coast here in the United States. They would have had to have those orders in, or at least begin that process today. And, about 2 hours before market open, everything dumps down, and they announce that they're pushing their orders. By the way, the seed round fills have to be completed on that day. So, and or before that date. So what they can do now is they've given themselves until the 5th of January to complete those seed round fills. BlackRock's only got a very small amount. I think it's 10 million. And then there's another, one of the ETFs has 200 million, and a lot of numbers being floated around out there. It really doesn't matter that much. The seed round money is just, initial buy-ins to start seeding for the first creation units. And it's funny timing. The other funny thing about this particular dump off, we're not really running through charts right here, but the other funny thing about this dump off is that the co-founder of Matrix Port there that released those two very silly articles, both of them were silly, by the way, if you did read them. The founder of there is the Bitmain manufacturer founder, Jihan Wu. So that is, the guys who manufacture the ASICs for mining. So he was also, if I'm not, he was pretty involved in the good old block wars, if I'm not mistaken, as well. But, a lot of funky business, right? I've been staying out of the speculation of, whether or not, Bitcoin ETFs are going to be approved on the 10th. I mean, who cares? They're going to get approved eventually. That's not what you should be focusing on. You can't chart a BTF approval or BTC ETF approval. Jeez, I messed that one up. But either way, it's a lot of silliness. The charts already kind of gave a lot of this move down away. If you were paying attention in the lower term timeframes, was getting pretty exhausted up near that monthly. Big resistance. First pass rejections are not a big deal. And I'm not looking at this personally as something that is, anything more than corrective. And corrections can be nasty, and they can get even nastier. So in this case, I did want to pull up the daily chart here for open interest, and you can see that we did touch off down to the $10.8 billion level on this wick low in open interest, which was the wick highs of, guess what, this range back here at around 31.8 to 32.4. Now, the reason I bring this up is that this was an open interest retest of an area that was rejective for open interest. And this just so happens to line up with the big old breakout down here. This would be on the, excuse me, on the daily, as I threatened to hit puberty for the second time in my life. But that would be where open interest was around this daily, weekly, monthly support resistance pivot. Now, to give you an idea of why that area is so important, not just for open interest, but for Bitcoin in general, is, well, that was well, let's get rid of volume. We'll talk about volume in a moment. But that was the close open that led to the breakdown candle. So when looking at the monthly here, this 31.8 level was the May into June of 22 monthlies that led to breaching the lows on a close, thus sending things down to the now confirmed macro low down here. Why is this a confirmed macro low? Because we have a higher low, major low. This was only a major low to begin with. Now we have a second major low, and we have trend, and that does solidify this macro low down here at $15,500 on the wick and around $16,500 to $17,000 on a close. So that is the macro low. That was the big bear candle. That was the biggest bear market candle that we had from wick to wick and open to close down here. So that 31.8 level was very, very important. Only tested really once, but it was kind of getting front run down here at these weeklies that were being put in there, which are weekly close open swings in and around the 30,300 area to 30,600. And, it did try up for the $31,000 multiple times, wicked into the 31.8, big move down, big sell off. Then it plowed its way back through after retesting those weeklies at 30,300 to 600 and absolutely torched through this rejective area at that daily, weekly, monthly level. There is a daily redistribution structure there that I have marked still at 32.4. But basically, once that monthly level was breached, where did it run to? Well, it ran right to the next monthly level after wicking into the weekly also there. So there's monthly and weekly resistance at 35,000 and 34,750. Came up to the next weeklies here, got front run at the monthly at 38.5. And then we saw the 38.5 finally get breached here after multiple tests, 3 wicks, in fact, into it. We get that area breached to the weekly, right on the nose there at $39,000. That was a perfect call, by the way, back then. We were looking for that on the close above 37.7 at the time. And then what did it do? It ran right to the next weeklies and then up to the next monthly. Screwed around a little bit, consolidated, and then gave 2 nice tests up into this monthly overhead resistance. This is one of the reasons why I tell you guys to take it level by level all the time, because we know that this is significant resistance overhead. It's a significant closure there at that 45.5 area, and we did see 45K tested. I would count that as like a monthly test, to be quite honest. It's only $500 away on an asset that's trading at 45,000 anyway. So not that crazy to kind of front run that overhead resistance. And then we did see the nice wick above to $46,000 nearly. It did come $75 short of that. And then a test right into that monthly, nearly to the dollar there. Now, to be fair, it's not nearly to the dollar. It missed it by, it missed it by almost 10. Well, so it's like $9, $8.50 or something. It missed that monthly by. That monthly is technically at 45,528, but Either way, this kind of recaps what's going on in the market right now. We did, and I did, not we. I'm only one person, but I consider all of us here as a community. So that's what I mean when I say we. And in this case, I did talk about this yesterday, just, right after close. It looked very strong, provided the conditions that I was laying out were met. If those conditions did change, then we were looking, take it level by level and then head down back to the lows. And just to take a look at this on some of the lower term timeframes with the support and resistance here, you can see that this test was absolutely bonkers perfect. So on the 15-minute, we did have the consolidation. We had the swing above. The monthly here, we got two nice swing highs above it after a little bit of a swing consolidation and slight rejection up at the highs. And then we saw consolidation, a push up, a nice little compression, squeeze down, starts to expand down and bounces right off that lower second standard deviation of the Bollinger Bands, and then retests the actual monthly directly before starting its expansion to the downside. Here was your warning, by the way. When you're looking at support and resistance, I want you to notice something else here. You could probably see it before I point it out. So when you're looking at this, you could see that expansion began to the downside. So this was already telling you, at bare minimum, it was breaching this low side structure. So we got to start looking around, the most recent highs, which was at 43.5 to 43.8 at this swing high and closing high to swing low and closing low down here. So it's 43, technically 43.4 to 43.8. No, I'm sorry. I'm saying that wrong. Yeah, it's 43.4 to the high here at 43.850 or so. Yeah, it's close enough. That was the next big area. You did see an initial bounce off of this this little higher low swing. And then the next candle continued its expansion to the downside. Now, even at the time, you could tell that this was going to continue expanding as BBWP was aggressively expanding to the downside here and had not even peaked and hit 100% until the big dump off candle with this nice wick here. We also had a bias on this to the downside after it got rolling with expansion. So it was getting expansion to the downside. So it started expansion to the upside, ran the other way, closed below the lower second. You can see, by the way, getting really close in here. You can see that the upper second did not get closed above here. So we saw upper second expansion. It did get expansion up. So we saw the upper second standard deviation breached, closed above, getting expansion above the monthly there. Comes back down for a lower second test, back up to the upper second, no close above, and then begins expanding to the downside, rejecting that basis, building up some divergences, retests the upper second, comes down, holds the lower first, retests the upper second, no close above. So it's not breaching, it's not meeting the criteria for continuation, meaning it's not closing above the upper second while also breaching, this high over here. Comes back down to the lower first, comes back up and retests the upper second again. And guess what? Did not breach this high over here. And you could call it like a high-low cluster on some of the time frames. Comes back down to lower second, runs the other way. By the way, it started its expansion to the downside here and then ran the other way. And again, did not close above the upper second standard deviation. So if you wanted to see continuation to that monthly high and above, now, yes, it did wick it. But in this case, you needed to see closures above the upper second that also break local resistance and long-term resistance. Did not do that, ran to the downside, closed below the prior low, on expansion, below the lower second standard deviation, also took out the wick low in the very next candle. We start targeting these areas down here, and it raced down after a nice little order block candle here at roughly $44,000 or so. Now, this is, a liquidation cascade, but look at how structured it is. I did say note the levels and where things closed, and we had this ever important weekly area, and you see it wicked right down through and then closed right above that 41.8 level, coming in with a close at around 41.908 in this case, and it is now kind of playing in this weekly zone. And that is something that I pointed out in yesterday's video. So what beautiful, beautiful price action, by the way. And again, I want to go back to real quick here. Just pay attention to open interest. When it's getting too hot to trot, funding's kind of oscillating around the highs and all that good stuff. It's worth paying attention to where things are in relation, when it comes to structure in relation to open interest here. And in this case, I do want to show one last thing with open interest. So we looked at the hourly, we looked at the daily. We could see new lower lows on open interest on the hourly. And technically not a range breakdown, but a wick down below. And without getting that range breakdown on price, but getting that range breakdown on the open interest, this tells you that a lot of players that got washed out aren't eager to get back in just yet, which is fine. And generally, when you see open interest rising, price will rise with it. If you see open interest rising and price is not rising, that means that shorts are probably in the market and likely to get wiped as well. In this case, we can see that the 4-hour, I did want to note this, the 4-hour has yet to close below this higher low right here prior to the monthly overhead test at 45.5 and above to 46K at the wicks. This higher low has not been closed below. It has been wicked below. So this entire consolidation has been swept all the way over to these guys here at the lows on a close for the 4-hour. So all of the closing lows have been swept on this wick, and it's still holding for now above this higher low. And I would give it some room. I would say it can hold above around $42,000, $41,800. That lines up nicely with our weekly support area. And the reason why I bring this up is because it's in a position right now on the 4-hour where it could set a higher low, and this would be a lower low on open interest as compared to the prior double lows here or equal lows on open interest where these higher lows were coming in, right? Where it had, technically this downtrend, lower lows, and then the higher low put in equal lows on open interest. Well, now we have lower lows on open interest with the potential for yet another higher low scenario on the 4-hour here, which could pop things back up, maybe even run the highs and higher. We don't know. We would have to evaluate that, but it is something that I will be paying attention to, and I suggest you do the same because that would be a divergence and a valid one at that on the 4-hour. I do believe this is also on the 6-hour, and it is, yes. In fact, the 6 hours got more leeway for an open interest divergence here. So this would be a regular bullish divergence because it is in trend. And yes, they do work on open interest. Why does it work on open interest? Because open interest is literally the liquidity of the market for derivative contracts. Excuse me. And having a little bit of a tough time speaking here, but yeah, I mean, what a perfect test down into the 10.8 bill level, which was also that 31.8 level, 32K level. Wow. Gotta love it. Gotta love it. Now, to be fair, it is the wicks, but it did sweep down there. I absolutely love it, especially if on the backs of this, we do end up seeing an ETF, spot ETF approvals, soon. Then what a fitting move. You can speculate all you want about coordination and manipulation and blah, blah, blah. None of it really matters, to be quite honest. Let's go ahead and check up on the momentum, though, and kind of gave that away on the RSI there just for a second here. We can see that Stoke would cross up on any close back above $43,000. Now, that number has adjusted since yesterday because of the dump off here on the daily. Looking at the 12-hour, you can see it will close, on an initial cross to the downside. And I want to be very, very clear about this. Initial cross to the downside is not a complete momentum shift. But in this case, any close below 43,250. So it's still around that same number that we were seeing yesterday for that staring at charts video. In this case, on the daily, you can see that there is bearish divergence populating here. This potential was here at any point that it puts in a higher high and on price and a lower high on the on the RSI, we can see that in trend, we're kind of getting that consolidation to lower high on RSI, higher high on price. So bearish divergence is populating, kind of across the board here. Now, to be fair, I will tell you that the easiest part of this bearish divergence has already played out. Back down to the 50 read here after touching off into the bullish control zone. And only, so the easy part of this move is played out. If this bearish divergence is going to play out any further, it would be breaching these current, the current low side structure around that $40,000 level. In this case, 40,150 to the current wick low of today's candle at 40,500. Below there, then we start looking, 39 at the weekly, and then 38,500 at the monthly, and further down into the 37.7, 36.2, 35K, 34,750. So what I just named are all the important support and resistance levels on the monthly and weeklies down there. So still not the first thing I'm looking for, especially if it doesn't mean it can't happen. Bitcoin is dangerously close to doing so, especially if we do see Bitcoin closing below the lower first today. It's likely it's going to run that lower second again and retest around the $41,000 and under, maybe even the wick low, and swing these lows at 40K. That's where, the potential for that 39,000 to 38.5 retest of these candles over here, specifically in and around these wicks, maybe even to the closes and, the deeper $38,000 level are in play. But I'd be very careful calling for further breakdowns until we saw, significant time frame closures below there. It starts with the daily, obviously, but then I would want to see that bleed into higher term timeframes as well. Now, in this case, when looking at BBWP or the volatility metric, we can still see that this is what would be considered an abnormal move unless it closes below the lower first, lower second. So this is how you would see BBWP being maintained, or volatility remaining high and not going back into a contraction phase, would be if Bitcoin closes, and I want to be very specific, so please pay attention to this part. If Bitcoin were to close below the lower first, that would keep volatility about sideways or even. And then if it started to move down towards the lower second, you would see volatility expand again. And then if it closes below the lower second, it would start to increase its volatility or expansion to the downside, right? But if Bitcoin manages to close above the lower first, and specifically above the basis band, I would be very, very cautious if I was bearish, if I'm a bear in this market, and looking for big bad breakdowns, mainly because the moving average and BBWP are pointed to the upside still, meaning that if Bitcoin did close above the basis, it can close in and around there. It's got maybe a day or two that it could do this, but it can close in and around the basis to lower first. But if it starts to regain that basis and head back towards that upper first, this will have been considered a very good opportunity, as the expansion had begun to the upside and then came back down for a retest, and then it would just continue on with its expansion to the upside. Now, again, I want to be very specific. Expansion will remain intact and start beginning expansion to the downside if Bitcoin loses the lower first on a daily closure, then subsequently loses the lower second. Not test into the lower third, but lose the lower second and the range lows. So that's the criteria. Then I'd be looking for that expansion much further to the downside into the weeklies and monthlies down below. And that would be, again, closes below the lower first, big warning sign. That's around 41.8 to 42K. That's the weekly again. And then also the secondary criteria for continuation would be losing the wick lows, which are right around the lower second, but losing that lower second and these closing lows, and specifically dropping that wick low, which is currently at 40,150. So basically around $40,000. Then I'd be looking for continued expansion down into those lower supports, 39K to 38.5 specifically at first, and then come back to it later. So let me just peruse chat here. I see that there is a lot of discussion going on. Just for a moment. It's a Wednesday. It's a live stream. Let's go ahead and just wing it before we get into any other things here. So Jedi, hello. Bobby, hello. Cheryl, hello. I think you're the only ones chatting right now, but I do see quite a few people in. I see actually a lot of people watching the stream right now. They're showing. Why aren't they showing on this page? Like I see just the people chatting on this page and showing me only those, but now on this other one, I see quite a lot of people watching. If you are watching and you would like to chat, ask questions, comment on anything, please go ahead and, I would like if you subscribe if you enjoyed the content or the analysis that I just did. I will continue to take a look at Bitcoin in some of the lower term timeframes as well. And we'll look at a few other things of interest within the range and from outside of the range for Bitcoin here. But if you would like to chat, you do need to be a subscriber. I have that on so that I don't get spammed. Let's see. So longs got wrecked. Glitch in the matrix. Sideways and down, please. Yeah, I mean, this is a very good opportunity. There are implications on some of the higher term timeframes if we start seeing the daily close, basically below the range lows. But we're going to get into that in just a moment. Let's see. What else do I got here? Probably went over this. I failed to catch the wick down. Didn't set your buy low enough. Wasn't looking at lower two. Not sure what your question is there, Cheryl. So you probably went over this. You failed to catch the wick down, which is, yeah, I mean, honestly, you shouldn't really be catching falling knives unless you specifically have buy orders set on very specific higher term time frame levels that you're interested in accumulating at and have a plan for. Wasn't looking, still learning. Well, I mean, the wick low went right into some major support areas right at the lows. I mean, we have some volume-based areas we're going to look at in just a moment. Yeah, never catch knives. Never catch knives and never catch hands on the upside. Basically, everything. This wasn't like this made higher highs and then dumped off. I mean, it made lower highs, specifically got expansion on those lower term timeframes and met all the criteria for continuation to the downside. It just, it took big chunks out on the way down, and that's, it's take the stairs up, and then bulls take the stairs, and bears take the window. So, just discussing volatility. I would be careful of setting blind buy orders unless you are, very specifically going in with a plan for that kind of stuff. Like you have a specific strategy for, buying spot or taking a trade, that you have a specific risk reward ratio for. But, when you're catching knives, You got to get in there and evaluate it. You're either going to get into the wick or not, or it was already a level of interest for you, which down at the lows was a level of interest for many. I mean, just looking at, what we were talking about in previous streams, pretty easy to kind of say like, hey, if it hits the range lows, I'm going for it, kind of thing. And that's, anywhere between, $41,200 to $40,000 basically. This also lines up with the lower second, lower third standard deviation area. We have compressed bands. This wasn't like huge volatility expansion on the bands themselves. It was good price volatility expansion, but it didn't like immediately rocket up to the 70s, 80s, which is what you would want to see for continuation to the upside from yesterday. But in this case, it's volatility is probably gonna go sideways on the daily at least for some, depending on where today's candle closes. But in this case, big area of interest within the range here. Not unexpected that Bitcoin would get a nice bounce from there. So to be quite honest, I don't usually tell you guys this, but yeah, I had orders set there. So it's even though prior to me closing out the stream yesterday or my video yesterday, you may note in that video that I uploaded yesterday, the very end of the stream, I very much concentrated on the 12-hour and the lows specifically because, when looking at momentum on some of the lower term time frames, like the 4-hour, we saw it maxed out on the volatility expansion here to the upside, coming into this retest of the 4-hour upper first. And look, it dropped the basis on the 4-hour, and then immediately went to drop the big thing was dropping that basis on the 4-hour gave you the bias that things were going to head down to the $42,000 area at the lower first because of the expansion here, and then lower seconds on the board if price starts trading below there. This is where having the band medium time frame levels or configurable time frame levels off to the side here are going to be helpful when this is integrated into the indicator here. Multi-time frame levels, I think it is. So here's the daily Bollinger Bands on the right here. But let's say I wanted to look at lower term time frames and I wanted the 4-hour. This will be something that you could do. So I could just select the 4-hour and then we can see that's lined up, and then we can go to the 15-minute, for instance, and you can take a look at where things are on the 4-hour. So 15-minute rejected the upper second standard deviation. So next place you look is the 4-hour. You look at locally for the 15-minute chart, but you look at the 4-hour upper first then, because it did not make it to the upper second. So getting below there at the time was around $40,000 or $45,000. So drop that, basically $45,000. You've got the local area here, but you're getting expansion down. So if it breaches the local lows, you're looking lower to the basis band, which was around 43,800. You did see this get in and around that area with the expansion here and try to pick itself up off of that. Next candle down after losing, it was also a 4-hour close right here, coming into this close open. And then the next 4-hour close was straight down. Now things are just in a sideways consolidation on the 15-minute here, as denoted by the Bollinger Bands here. And when looking at the 15-minute Bollinger Bands in relation to the 4-hour bands, you can see that the upper second and upper third is where the 4-hour basis band is currently. You can see that if Bitcoin can regain the 15-minute lower first, it has to contend with the lower first on the 4-hour, basis on the 15-minute, and then some local resistances from the most recent swings that have been put in by the upper first there at around $43,000. Above there, then you can look to the local highs, upper second, upper third standard deviation if it gets above into the basis band on the 4-hour, and then right back on up into the $45,000 level if it does recover above there. In my opinion, that's a very easy call, especially with Bollinger Bands this wide set on the 4-hour. Getting these rundowns and then moves back up, not a big deal. It's more of a big deal if it starts closing below the lower second on the 4-hour, and that leads into the 6-hour and loses, the lower first, lower second on the higher term time frames like the 12-hour and daily, stuff like that. Right now, this is back tested the lower first on the 6-hour. If it can regain the lower first on the 4-hour at 42.5, 42.6 area, then we're looking to the basis on the 6-hour around 43,235 to the basis on the 4-hour, which is what these levels are currently set to right here at around 43.8 to 44K. Then the 6-hour upper first around 44.5 to the upper first on the 4-hour, which is at $45,000. So playing around the prior wick highs. Now, just to get a little bit deeper into this, I do want to point out that I am still tracking something that I taught you guys quite a while ago, and that is volume mapping. So I tracked the volume maps to the highs here, and all the way from our 26.5 low, because we still haven't had a major trend shift on any major time frame. So haven't marked the new highs here, but I want you to note a few things. Well, first we'll go ahead and we'll turn off the volume map for a moment, which we did on the 15-minute. So this is a 15-minute volume map. I want you to note that this candle right here, this last dump off low, we're going to mark this. This last dump off low, why is this not? Okay. Hold on, let's zoom in and see if it'll actually click into place. There it goes. All right, so you see the last dump off low, very high volume in this range up here, right? And you can see after getting to this high volume candle, what happened? Well, didn't even get there. And we've seen now the largest amount of volume within this consolidation. So, well, it's a whole bunch of players, getting liquidated, selling off, coming out of position, whatever it might be. It means that the other side of the trade has taken place. So a lot of on both sides, there's a lot of volume picking up, a lot of buyers and sellers in this range. In this case, the case is being made by many that it's all liquidations. Well, remember, this is spot. So this high volume wick low is more than likely big buys coming in. So this is significant, and this is a very significant amount of volume, especially when looking at this particular range. Even the breakouts coming in here. So just to kind of give you an idea of this bar, I think we can get a read on this bar. Maybe not. We're only getting the current read over there. I might have to grab another volume indicator to do that, and or just whip one up myself to kind of give stats on the volume bars. It's not going to be 100% accurate, but I want to say that this is probably the highest volume we've seen in a very long time. You can see it auto adjusts the volume there, so we can't really see where it falls, but this is extremely significant volume. So one of the big things that I'm going to show you on the volume map is it falls right on a volume map level, or right in and around a volume map level, especially I believe on a close. But either way, if this wick low is dropped, I mean, this is a stupidly high volume candle. If this is dropped, we're looking at continuation to the next big areas, right? So let's go ahead and get rid of that area, which would, the next big area, to be fair, is 40,300 that got swung on a wick, but not a close. And that was still within the uptrending volume map. So let's go ahead and turn the volume map back on. And I want you to note, remember the volume map, yellow is a 15-minute close, wick is a high. Remember, these are closing highs with the wick highs marked as well. So yellow is the closing high that's been put in. It has to be an actual closing high, and a swing high, which is the white or the wick. You can see that it slammed right into that 40,655. Yes, it did go through it, but basically that's a close to a wick swing area. And then it closed, way back up here through multiple volume levels, with that close coming in at that 41.9, 42K on some exchanges, and then comes right back into this zone, this void in volume. And we're looking at the initial swings that build the moves on the way up. The rest are inside bars. So you can see that after it started to find its footing around this particular close here, and this particular close was coming in at that 41.980. It started to regain its footing, take out the wicks there, the 42.4 area, come back down, find support, and then it's got this void where basically between 42.450 to 43.740, 750 area are kind of the zone that it's playing in. So I would give it down to basically this close at 41.9, 42K. Again, it's also a weekly level at 41.8 to around that 43,000. I would give it some room, 43,800 to that wick high at 44K. Pretty crazy, easy, accurate stuff. Oh, hey, look at this. I had mapped out this nice high volume because this was high volume at the time on this high up here, right? Close coming in at $40,093. The high was coming in at 45,417. We did see, not insignificant volume, or no, it was insignificant volume. We're getting more volume on the lows here, coming back to retest this zone. But look at this. You notice this void here in price? Well, between $45,000 on this wick, which was the prior wick high, which was very high volume at the time, relative to the surrounding volume, right? 45K on the wick high there, which was our high for a little while. You come back here, between that wick and the and the highest close prior to this most recent run up, coming in at 44,420, nice. We can see that price basically raced through these areas. Once we saw the close below, yes, you still pay attention to local support resistance. It could have swung this low. No, we don't mark it because we're marking uptrending structure for prior retest, for retest support. In this case, when we saw 45K lost, it went right to the lows, right? And it closed below the lows, giving us the bias that at minimum, this local wick low area was going to get tested. Nice little order block over there as well. Coincides with this test. And then we see this area get closed below, down below 44,420, tries to peek its head back up, giving us, again, a little bit of a bias that it could test higher if it did not dump out back below 44,420 and lose the moves wick low. Again, we already saw expansion and all the other stuff, right? So we were already getting the bias that this was probably not going to just reverse, but if it did, then we just look back to these levels and then back to 45, 45.1, and then 45.5 and 46, so on and so forth. But then we just see it, just head down level by level. So we see that this area lost, big void from close to close. It closed right on it, opened, and then dumped off to the next big void. So technically there is a close, a wick at 44,420. I'm sorry, 44,420 is up here. We see this candle breach that wick, close right on the close swing at 43,740. Then open and dump off right down to the $42,000 void level. Absolutely beautiful, and this is how you can deconstruct an order book. Again, it's not too hard. I don't keep this on my chart all the time. I do check on it often. I do update it. I suggest you do the same. We will revisit this and have a dedicated video for volume mapping as well. Maybe that will be one of the staring at charts videos if nothing super interesting is going on. That's okay, Cheryl. If you didn't catch that, it's you can roll it back, either DVR it current here right now, or you can wait till the end of the stream and just run it back. It would be at the, what are we at here? How long we've been going? So this would be, where's my timer? That would be at like the 50-minute mark or so on. Probably spent about 3 to 4 minutes there on that. But let's go ahead and take a look at some higher term time frame stuff. Right. We do want to see where things are falling on some of these higher term time frames. So we did see the upper first closed above. This is a run back to the basis band and almost a wick into the lower first on the 2-day chart. Now, the 2-day chart was tentatively turned to the upside here when Bitcoin was trading above 44,500, I believe. It has since shifted down a bit to 44,191. Now, if Bitcoin basically closes back above the upper first, I would be biased for things to run that upper second here at around $46,000 again. To be fair, it is slightly above the wick high here, but it's close enough. We didn't quite see $46,000 hit, but you can see that this is a compression on the 2-day. So I'm not very concerned about any of this. Still in a compression phase. We did see BBWP move up above the moving average, but the moving average did not get a positive slope. This candle just opened. If it does happen to close above the basis here, which is at 42,300, then I would be biased for things to head back to the upper first, at least at that 44.2 area, which is right around the 2-day wick highs here and this closing structure over here. So, that's the bias basically. If it does start to break down from the basis, we look right back to that lower first, which is coming in right around those lows. And that is currently at 40,415. Below there, we're looking to the lower second. I would be looking to the lower second for support, as that is coming in at 38.5. Oh, hey, didn't we talk about 38.5? Yeah, that's right. That's the monthly. That's the wicks over here. So that would be the next big area of interest that I'd be looking for if things do aggressively dump to the downside. And I would be looking for decent bounces from there. And then we come back and reevaluate structure. 3-day. Wow. 3 days looking a little tired here. Looks like a rejection. Again, if you're a pattern trader, there's going to be all kinds of pennants and triangles and crap like that. None of that matters. It's fun to draw. It's fun to evaluate and find confluence in, but it doesn't really matter. Most patterns have a very low hit rate when looking at statistics. And in this case, just go with horizontal support and resistance. And once one level breaks down, move to the next and gauge it via trend and volatility expansion and contraction. And that creates your momentum. So it's not too difficult to evaluate these things. In this case, basis is fully in play as long as Bitcoin is trading and closing daily candles, and specifically 3-day candles below the upper first. The upper first is coming in at 43,260. So if it does get back above there by the end of today, then that would make the upper second standard deviation available again right around the highs where Bitcoin traded to, and in the low $46,000 area. If we do see the lows dropped, and specifically the low dropped, because that is where the basis band is coming in, somewhere around that $40,000 level, then guess what? We can look horizontal support and resistance, 38.5, down to 37,000, in this case 300 at the lower first, but this is likely to head up to around the weekly at 37.7, which is just below that monthly at 38.5. So that is, again, for those that may not have this memorized like I do, that would be if Bitcoin were to head down, first place we look, weekly at 39K to the monthly at 38.5. We already saw that the lower first on the, lower second on the 2-day is right there at that monthly. And just below it is a weekly at 37.7. Unless Bitcoin dumps out unless Bitcoin dumps out below the basis and heads towards that lower first before close today, we're likely to see the 3-day update as it is closing today to somewhere around 37.7 to 38.5. So we would have confluence there at that monthly and the weeklies surrounding it. If that area is dropped, we're looking to the lower second, which is likely to be around another big monthly area. It's currently at 34,300. It's likely going to be around that $35,000 monthly for those that have not seen that or do not remember that is at $35,060 with the weekly just below it at 35.50. This is the 15-minute chart, so that's why we're doing all this scrolling here. And we have multiple arrows on the chart. So that's basically the areas that were back tested before we saw the weeklies and monthlies taken out on the way up here. Big volatile moves. Gotta love it. I do. It's how we can make money both to the upside and downside. And yeah, this is kind of basically what I'm going to be waiting for here. Again, below the upper first on the 4-day, which is coming in at, we'll call it 43.9. I'm sorry, 42.9 to 43K. Below there, we're looking for the basis to get ran somewhere around it at least, which is at 39,250 right now. So basically anywhere between the lows at 40,150 to the weekly there at 39K. Below there, we're looking to the lower first from the 4-day perspective, which is coming in at 35,500 now. So again, right around that monthly at 35K. 5-day, upper first, as long as it holds this area. Upper seconds, fair game. That's nearly at the monthly levels, 47,000 to 48,240. This is kind of splitting the difference there at 47.7. And in this case, dropping the upper first would give us a bias towards that basis band, which is now coming in at $36,000 on the 5-day. The basis band is at 36,440. I would still give it room down to those other areas like 35,000. Below there, then we would be looking to the lower first, which is well above the last higher low now, and that's coming in at 30,800, which is right across these 5-day highs. So 30,600 to 800, or 30,300 to 600 if you like on the actual weeklies. On the 5 days, it's almost 30,800 on the closes there, and that would be a gift in my opinion. I would like to see that. Go ahead, do that, please. Dump it out. More FUD articles. More articles. More, spread all the news. There's no ETFs. There never was. It was all made up story to pump Bitcoin. And let's get it back down to some of those $30,000 buy levels. That'd be amazing. Above the weekly upper first, which is basically where the wick just came in. We're looking at 40,500, right? As long as Bitcoin's trading above there, we're looking to the upper second, and that is at the 47,200 area where the monthly is. Below there, big bad moves down to higher low territory at $34,000 or so. Yeah. Nothing dire about this. I know that there's a lot of hand wringing in the market right now, especially with these fudsters. There's they put out fake news because they're trying to shake you out before the Bitcoin ETF. No one knows if they're actually going to approve it this week or next week, and there was all kinds of speculation like they might approve it early. They have to approve it by Friday. They got to do this. They got to do that. They don't have to do shit. It's not your schedule or my schedule. It's their schedule. And yes, the SEC is meeting with everyone today again. And realistically, what they're doing is they're hammering out the details for launch. And they're assisting. The SEC is actually assisting them because they're not just meeting with the ETF filers. They're meeting with the ETF filers, DTCC, and NASDAQ all today. Like, the reason why they're doing that is because they're prepping. Who cares when? They could still delay, and that just means they need more time, and I think that's good. The more time they take, the more accumulation happens. The longer that things can cool down on the very high term time frames that we talked about on Monday, and then we can this thing can rip or get expansion for a lot longer. Especially when looking at the monthly. And I do want to call out the monthly again, just to revisit that the upper second standard deviation is at 41.9. So if Bitcoin does drop that on the monthly, pay attention to that upper first, which is at 34,400, 34,500 area, which is right around the monthly low here at $35,000. This is reacting in real time to price. So when price was trading a bit higher than that, or where it is now rather, the upper first was around $35,000, which is this closing low. So nothing bad about this. Let's go ahead and look at the 2-month again, just to remind you, there's nothing bad about this, especially if it's closing 2-month candles above 26,500, which just happens to be, well above this prior 2-month higher low. That's above the weekly higher low over here. So that would be this weekly higher low at 26.5. So, or it's right at this weekly higher low, but realistically above the actual higher lows on the 2-month. Still fine, still trend, looks good. And I love volatility to the upside and downside. Both are tradable. And as we discussed today, it's not that difficult to see these things coming. You never know how deep it's going to go when you see expansion, whether it's to the downside. You never know how high it's going to go when you see expansion to the upside. That's why you're looking for each level to be taken out. And if there's just, to the upside, there's plenty of overhead resistance, historical overhead resistance. To the downside, there's plenty of historical support right now. We're not in blue sky breakout territory or in any kind of horrible bear market breakdown territory where there's large gaps of interest, meaning large areas or gaps in bids on downside moves. So in this case, nice opportunity for the range trade, that's for sure. Nice short down, nice little bounce trade back up, and then, this is still higher low, higher high structure on the daily. So until proven otherwise, it's consolidation, and generally I would still be looking up and to the right. I know that's not what it feels like right now, but higher low, higher high in a close, and a higher swing so far. And again, this won't put in a technical high. I know it's going to put in a high on every RSI indicator under the sun right now, because if it closes below the open of yesterday's candle, which is at 44,220, it's going to paint a technical high. But realistically, 3-candle high is not in until or unless we see a close below the January 1st candle open at 42,300 or so. We see closes below there. Well, we've already seen the bearish divergence, or the easy part of the bearish divergence, play out right back to the low side of the range. The only other condition for continuation of that bearish divergence would be getting expansion below the lower second that breaks the range lows and starts hitting those targets to the downside. So those would be your deeper targets. And I do want to bring up that RSI one more time before we end. Hey, Landy, you didn't talk about traditional markets. You said you were going to talk about traditional markets on Monday on the Wednesday stream. Well, I think it's more important to focus on this stuff right now, and then we'll come back to it on Friday and look at traditional markets. There's nothing too crazy. They're pulling back from their all-time highs on NASDAQ, and Dow and SPY did not make an all-time high. So nothing has changed in my outlook for them to get continuation, but I'm not looking for like a big bad breakdown just yet. Dixie setting a local low. So we still have to evaluate it. Still a downtrend. But the easy move for this bearish divergence on Bitcoin has played out. Granted, there is multiple bear divs, but within this range, I guess there is, I guess we do have one. So there's 1, 2, because that was counted as a high technically, and this would be 3 for this particular move. So yeah, I mean, there's all kinds of bear divs through here. They've all been corrective. I do like my 3 drive reversal patterns though, so there could be a bigger move to the downside. But again, the easy part of this has played out. It's only if it breaks the lows do we look for continuation. In that case, we can start looking at, this is a Caretaker's RSI. So if you want to get one, there's plenty of free RSIs that have mapping for the levels here. I just like the way Caretaker does it. You can find it at app.crowdtrading.net. I don't make any money off of that stuff. So if you did like Caretaker and you want to support his work and Crown's work and all that kind of stuff, you can go there and pick this up. Otherwise, you can grab free ones that have all of this same information. But in this case, I like the way this is laid out. He has levels. So the cross below the midline at 42, 433 on a close. And we can see the bearish control zone is at, wait, where? 38.6. That's right. It's right around the monthly level would be the bearish control zone down there. Now, to be fair, I would want to see multiple drives of bullish divergence or hidden bullish divergence for a reversal back to the upside to retest the highs. If it did dump out of the current range, we're probably looking at a bearish retest and then consolidation. But that's not worth talking about until we see it, right? Or if we see it. In this case, is it threatening? Maybe. Pushing back above the basis band, like I said. This was all opportunity in that case, especially if it closes above the basis band and anywhere above the upper first. Yes, it would still paint a high, but I'd be looking for these areas, for expansion to continue. We're looking for a widening range, and then, we just have the criteria of breaching, the closing structure here at 44,972 on a close, and then we're looking back to the highs again. Pretty easy. That would also be above the upper second, continuing expansion to the upside, which is sitting at 44,800, and or breaches the lows and begins expanding below the actual lows of the range. Cool. I hope all of that helped. Let me go ahead and turn on the tunes. We're going to start wrapping things up. I'll get into Dixie Gold and everything. I don't think it's worth looking at Dixie Gold and traditional markets today. Wanted to get through Bitcoin stuff. And then I also want to open it back up for Bitcoin-specific questions here. If you have any Bitcoin-specific questions, comments, and also if you watched yesterday's Staring at Charts video, if you have any requests or what your feedback is on that. So I have quite a few of you in here. Not a lot talking, but quite a few of you are idling here. If you want to chat, jump in the chats by subscribing. If you're already subscribed, go ahead and come on down and chat with us. So let's go ahead and get the tunes back on here. My son is very excited about whatever movie he's watching downstairs. All right, let's see. Yes, believe it or not, I record upstairs, not in a bunker. All right, let's take a look at the public chats here. I didn't take advantage of looking at those things. Wicks down to the left. I'm just learning. Just think. Still make. Look, everyone's going to make mistakes. Just always look left. Always look left. Understand where your support and resistance is on the higher term time frames. Let that lead you into the lower term time frames. I haven't got the fullest hanging volume either. Get there. Awesome volume. Yep. Okay, so this is back when you were watching the volume stuff. Yeah, there you go. The void. Yep. Everything crashing today and getting back up. Yeah. I mean, after a quick move in any direction, you should see, areas be reclaimed. I mean, we had a nice big move to the upside and a very large move to the downside. But that volume is something that might tell the story. That wick low that was put in today on the lower term time frame, like a 15-minute or hourly or 4-hour, because it's going to be the same candle. I would say, as long as Bitcoin's trading above it, it's going to most likely consolidate and try to the upside again. If it does lose it, then we're looking at the support levels down below. That is the significance of that particular high volume candle. One altcoin, just one. Probably not going to do an altcoin today or any alts. Come on, guys, sub. I think they probably are subbed. I've actually been losing subs, but I also didn't upload any shorts or anything for a while. I've just been doing the live streams. A lot of people don't see the live streams, so it doesn't even show up in their feed after they're finished. And, in many cases, what I'm finding, so they think like, oh, you must not upload anymore. I think, yeah. So, been a big concern for, I think that says LTC. I mean, look, you gotta evaluate what's going on the higher term time frames, and and go from there. Like, I would not be concerned about too much right now. I mean, other than your positioning for your current trades. If you guys are accumulating, you just got to have a plan for accumulation. If you haven't already, I do not think that this is anywhere close to the time that anyone should be giving up any accumulated bags. I don't think it's anywhere close to that. So everything until we start seeing some really major takeoff to the upside in a big way past the all-time highs, that's when we start evaluating for long-term bags that might be, offloaded. And in this case, I'm not the type that will offload Bitcoin. It's just, trading for more, closing out for more, that kind of stuff. And yes, almost all my Bitcoin trades are inverse, or coin M, or whatever you want to call it. I trade for more Bitcoin, always, in that regard. Let's see. Does leaving comments in the comment section for videos? Yeah, absolutely, it helps. Any kind of interaction with a video, whether it's a view, a like, comment, they all help. Yeah. Yep. Oh yeah. You want me to go to lower term time frames? Sure. I mean, as we begin to wrap this up, for those of you that are just joining, as I do see there's quite a few people that have now just popped into the stream. Maybe they saw the post on X or are seeing this in their feed on YouTube. I went over the downside move here on Bitcoin in detail in the early part of the stream. All I talked about today was Bitcoin, so kind of broke down the expansion to the downside off the failed test at the monthly, and why and how that happened, and how it split the levels and the levels of interest and what to look for and that kind of stuff. In relation to yesterday's analysis, which was a pre-recorded video uploaded after close. So Bitcoin specific question on the weekly. It's a weird structure on there, but the high technically be put in if BTC closes below 40,000 or 39.9. So the weekly, when looking at the structure here, it's just an accumulation structure at the highs. Sideways is the name of the game. This is also inside bars, basically on the closes. So anywhere inside of, it's basically all these subsequent closes have come inside that December 4th candle. Nothing wrong with this. I mean, if we did see a close below this particular close open, you would start to see a high being painted. So that close open of this area here, which you also see was a wick down from last week's candle into this close open structure. You could also call this, double order blocks. So trading below this order block, probably going to test this order block low. And let me get in with the arrow and get in a little bit closer so that you can see what I'm talking about. But all of these candles is 4 weeks of, still, just midweek now for this week, but will become 4-week candles unless this week starts to close outside of this bar here, which is the December 4th weekly. We have the wick down into this close open. You could consider this an order block, and then there's a smaller doji order block from last week. You dropped the wick low of last week, right? That's also the close open here of the 11th into the 18th, which is at 41,350. Technically, that's a closing high structure now because of last week's candle. And you close below there, and then the wicks are in play. So the upper first on the weekly at 40,600 to the low from the 11th, and the close open from late November into the December 4th bar, which is at basically 39,940K. Now I would say the high could be painted, or a high could be painted right in the structure here before taking out 40K, but I need to see 40K dropped, right? Like, we need to see that area dropped if we're going to look lower. And then we're looking towards weekly horizontal support structures. Now there is no swing close or swing high here, but we're looking locally. Could easily come down higher low off of the monthly weekly area at 37.7 to 38.5. Maybe even front runs the 38.5 at 39K locally. It just swings this close open and then heads up. We don't know, right, until we see it start painting. But realistically, closing below the upper first, putting in a high, breaching some of this prior rejective area, and instead of finding it as support, then we'd be looking to the basis there, just coming in right now at around 33.9, 34K. I would expect this, provided Bitcoin doesn't dump out hard to those areas. I would expect the weekly basis band to be around the monthly at $35,000. Currently, one of the big things that you do or should note or do want to note is the basis band is significantly above the prior weekly swing highs on a close. So the actual highs on a close rather, and the swing high wicks. So that's coming in again at 30,300, 30,600, and the wicks, around 31.8. We had the prior wick there at 31,050 bucks. So basis being significantly above a support like that is really what you want to see. And if Bitcoin did drop the upper first and head towards the basis, that will aggressively start to contract the bands, meaning that the lower first would start to really move up. Lower first is above the previous higher low, ever so slightly on a close at 27,186 here. Wick, it's quite a bit of ways away from the wick now on the weekly at 26,500. So 521 in this case on the wick low, which is a higher low. I mean, it's getting there. It's almost ready. If it is going to head down, would not be abnormal. This is a big breakout, and so far it's just a consolidation. So until we see a high put in, I mean, there's nothing bearish about putting in a high in the weekly. It's a trending structure. We're hunting higher lows at this point. If it takes out the 26.5 low and then subsequently 24,750, then there's problems. Nothing that I think would be catastrophic, but we would be looking for probably a longer period of time for things to make their way to the prior all-time high and higher. I'm seeing like so many bears that they gotta be just trying to get eyes on their content at this point, just saying really silly things. We've discussed all this stuff last year into this year, just last week into this week, Friday before the first, and then opening up Monday. None of this is anything crazy that we haven't talked about. None of this is a surprise. It is fun when things get rejected, and crypto X, crypto YouTube goes absolutely bonkers with all these extreme takes and silliness, and it's really dumb, to be quite honest. But I would expect just stay measured and level-headed and take your trades as they come. Oh yeah, Kramer praising Bitcoin yesterday and then into today. He never misses, man. It's his warning. He's warning. It's a shot across the bow. When he says shit like that, he's warning you. He's got his own little. He's actually doing retail a favor by giving you a warning. He knows what's up. He never misses. The inverse Kramer never misses. And at that point, you got to wonder to yourself, if the inverse Kramer never misses, maybe that's the code. He's trying to give us a look on the inside. So don't take my advice. He's actually a good guy. He's blinking a lot, because his captors are like, he's SOSing in his blinks, giving you all of the information you need to make informed trades by just taking the opposite side of him. It's all purposeful. Everybody's like, oh no, he's just terrible at his job. He's baiting retail into liquidity squeezes and making retail become exit liquidity. I'm sorry, retail does not have enough exit liquidity in the world in comparison to market makers, which are managing portfolios and managing risk. They are matching players on each side. They're hedging risk. So I mean, they move the markets, but realistically, they're using retail money to move the markets, or assets under management to move the markets. But they're not moving the markets in a malicious way. They're moving the markets in response to other market makers. It is competition, so it's not to liquidate poor little retail guys. And maybe Kramer's just trying to give us all our edge, let us into the big boy club. He can't just be out there being like, this is what they're doing. So he just takes the opposite side of it. And if you picked up on his code all these years, you're freaking filthy rich. And when his takes seem really out of whack and crazy, and the whole industry is gonna die, it's going to zero, this company's just gonna, I don't like their balance sheet, sell. That's your buy indicator. He's telling you exactly what you need to know. He's doing it for your benefit because he loves you. That's my take on Kramer. I don't think that he's a bad guy. Unless he's on that list, that certain list that might be released freaking any day now. Who knows? Is it going to be the 22nd? Is it going to be today? Is it going to be tonight? Is it going to be later today? Remember, it's just a list of associates, and associates are not people who went to this famous Caribbean plot of land in the ocean. So there's probably that dude was connected to everyone via money. So probably plenty of innocent people got wrapped up in that. So don't confuse that with the actual list. Caution there. I think the way that the media is making a big deal out of this, also exercise caution. Oh, Bear Stearns. Yeah. Bear Stearns is fine. That was his, canary in the coal mine. He was telling you, everything's fucked. Those who took his advice and understood the inverse Kramer effect at the time, understood the coded language that he was using by just taking the opposite, just observing. I mean, anybody could observe when he says to buy or sell something, it literally does the opposite thing. Almost nearly to the T. He did get one thing right yesterday. Bitcoin is not going away. Well, shit. Is he trying to warn us? You can't kill Bitcoin? Is he trying to warn us that you can kill Bitcoin? Oh, no. What if he's giving us the code? No. I'm just kidding. For those of you just joining the stream, Welcome. If you're not subscribed, go ahead and subscribe. You can chat with us down in the chat box down below here. But I've pretty much already wrapped up all the analysis. You can DVR it right back to the beginning. Only focused on Bitcoin today, and in relation to yesterday's pre-recorded video as well. So I want to welcome you in. We did our Bitcoin analysis, explained everything about what happened and how there was edge before it happened as well, in terms of what was going on. Yeah, Bobby, you're don't jinx it, dude. Remember, Kramer's got a flawless crap record, track record for having basically 100% on the inverse. So if he's saying that maybe he knows something we don't, maybe he knows that Michael Pena knows who the real creator of Bitcoin is, and that the real creator of Bitcoin is about to bring down the entire thing right when the ETFs launch. Oh no. Okay, that's all complete BS, but that would be freaking hilarious if we lived in a world where that really was the truth. It's only Kramer and only Michael Pena know. They're the only ones. If you knew who the real creator of Bitcoin is, I know who it is. You'd run as far and as fast as you can. Run away from it. Yeah, I told you. And Kramer warned you. We all know you got to take the opposite side of Kramer, and he told you it was 100% not going away. Can't kill it. He said specifically, you cannot kill Bitcoin. Well, was he really saying you can kill Bitcoin? Oh no. Can't fade the guy with a perfect track record, can you? Just having some fun. Obviously, you guys know that I am not a BTC maxi, but I am all in Bitcoin. So own a lot of alts, like alts, but I'm all about Bitcoin. And no, if you have an altcoin project, I do not care about your project. I care about your chart. Don't have a chart yet? Don't care. Something is special around those dates. Yeah, you're talking about the 15th to the 18th of August. It's expirations, but where you're looking at almost all quarterly expirations on those important dates, and it's usually the big monthlies and weeklies are being front run for those expirations on the quarterlies. So it's all liquidity flows, man. All liquidity flows, because you have to either close down your options or roll them. Much like what I was doing at the end of the year, rolling options into the new year, or strikes in the new year. It's very rare that you're going to see a lot of people, unless they want, whatever they're taking the option out on. It's very rare that you're going to see somebody holding till strike. You will get firms that hold till strike. Prop shops will hold certain options to strike for portfolio reasons for clients and stuff like that. But generally, it's arbing between the two before expiration. And if you're a retailer, you're a retail trader. Not a retailer, you're a retail trader, but then you're generally not going to exercise any of the options. So a lot of platforms will auto expire them, so they'll exit you, so that you're not, got eggs like the guy who did not exit his position on eggs and got like 600,000 cases of eggs delivered to him, or whatever it was. That's a funny one. There's other funny ones like sheep, like especially in the commodity section. It's just like, no, they're gonna deliver that shit now. If you don't have a place for it, that's on you. So it's very rare that you're going to see retail exercise options. You do see exercising of options all over the place at expiration, but in most cases, a lot of that stuff is being rolled and repositioned, and making money off of the Greeks, basically. And that is something that I will get much further into over time. We will be talking a lot about options. I will be giving you primers to options, the basics, and you will need to go do your research on them so that you can become adept in them. But I will go through and explain what call options are, buying versus selling a call option, buying versus selling a put option. I will go over the basics of the Greeks for you so that you can at least go in and start to understand what options are. And then I'm going to, explain basic strategy, when trading options, and, giving you hints about what some of my strategies are that are a little bit more advanced when it comes to options trading. So now, Bobby, what you got to understand about those options expiry dates is they're not always going to be, the bigger expiries are not always going to be right on the monthly close, but coming into it, sometimes they are right on the monthly close, sometimes they're coming into the monthly close, but it's realistically that's all prep. Those dates are typically prep for Q3 into Q4 in that case, which is why you're seeing the mid-August is you start rolling stuff, right? In preparation, hunting out strikes, maybe long shot strikes, evaluating the Greeks to see where things are in different companies or different indices and assets and stuff like that. It really is it's a numbers game, right? Because the Greeks are going to kind of give you an indication of where liquidity is at on a specific asset or indice, and then you can kind of go, well, we can roll a certain portion of our portfolio here. We can roll it, right at, nobody's really rolling right at expiry. You're not getting the best, the most ideal outcome in many cases, rolling just before expiry, and or a lot of cases, unless you are specifically, the goal is going into that expiry to actually take delivery. It doesn't make sense. You're going to roll on or before, and typically before. It's really it can come down to philosophy as well, and it also comes down to that particular financial institution or prop shop's risk management goals, right? And quite honestly, there's actual rules that govern a lot of that from financial regulations. So in most cases, when you're in shops, you have financial advisors, you have financial risk management guys, you have the actual traders, the market makers, all that kind of stuff that all has to answer to risk management, which is basically following regulation in most cases, and then a mixture of that and meeting risk management goals for that particular shop or institution. A lot of that starts with the biggest portfolio manager kind of going to the risk, the RM department, so risk management department or risk management guy, saying like, what are we looking at? We have this goal for us, this goal for our clients, and then we have the regulatory requirements. So give us the template, and the template's there, and you must adhere to that. That is like a super basic way of explaining everything, by the way. That's not necessarily how it works, and that's not necessarily how it works in every prop shop either. So it is worth understanding at least the basics that market maker is going to be the person helping facilitate, or the market makers there's thousands and thousands and thousands and thousands of market makers, and realistically, they are the engine that makes the markets go. Without them, markets would lock up and die. So, cool beans. I'll take a look at Dixie dropping like a rock. It's not really dropping like a rock, but I mean that's a 15-minute high put in, but it's still within its low side structural range here. It's it's nice little rejection locally off of this. Didn't even get to the open here for this gap. But this could trade all the way up to 103, 103 and a half, possibly back to the 104 region by the daily upper second. I said I wasn't going to look at these, but nice little 15-minute drop, that's for sure. Nice little sell-off below in yesterday's price action, but then nice gap up and open, and then trade above the basis band on the daily here. There's some crazy shit going on in the markets, but a lot of that is because of liquidity adjustments, from the fourth quarter and coming into the first quarter. So a lot of big players moving around, nations included. So, but yes, nice big Bitcoin-esque 15-minute candle down, although it wasn't a range break for that 15-minute on Dixie just yet. So that is going to do it for today's live stream. I will be back tomorrow with a staring at charts video, so please go ahead and watch those. They're going to be about 10 to 15 minutes. I will try to keep them within that range, maybe even under 10 minutes sometimes, but they will piggyback off of, at minimum, the last video that was done or the stream that we do here on Monday, Wednesday, Friday. So that is going to be the new series for the year. And then I think I'm going to supplement with shorts probably over the weekends, or just in like bigger events. Maybe it would be worth doing a short for this one today, but the amount of information that I'd want to fit in there probably wouldn't fit. So it'd be more like we've seen massive legs up to hit some of our upside targets and kind of just check in. But otherwise, it's going to be a little bit more of a focus on 10 to 15-minute videos this year. And then shorts will still be there to supplement in some way to try and grow this out. So I want to thank everyone for hanging out with me today. I hope that you guys found this stuff informative. We are going to start wrapping this up. I will put a timer on, and you're welcome to listen to tunes. I'll put it on for about maybe 12:20 my time. It's time for lunch. So about 12 minutes here. If you want to hang out and listen to tunes, play a chart, you're more than welcome to. Please share these videos. Throw them some likes. That does help immensely. But I want to wish you all a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. And with all of that being said, Landy out. Talk to you soon.